Hi everybody, Brian from Beer Traders here. It's the weekend, August 19th, and this of course is the weekend video. We'll go over what happened last week, and there was lots of news that affected the markets. We'll talk about that, and then we'll take a look ahead, see what we got coming up next week. NVIDIA is going to be the spotlight, so let's get down to it. Okay, so let's start out. As we always do, we'll just take a quick look at what happened last week of August the 14th. So we got a lot of stuff coming out here. We got the minutes from the Fed, and it was kind of mixed there. Some were thinking that the rate hikes should end, and others were thinking they weren't done. But I think the overall message was basically higher for longer. So no sign of a pullback for sure. And you had interest rates starting to rise. I spoke about that on the last week's video. Watching that high of 4.25 on the 10-year, and of course we went above that this week, and then we pulled back on Friday a little bit. But interest rates continuing to rise here and challenging the stock market. And then on Thursday, we get the usual jobs report. Of course, it's showing the jobs market is still very resilient. Then you've got the Japanese bond market, which started to rise. They started to untether their interest rates, so that was causing some shift in currencies. We get a large amount of bonds that are coming up for sale that are being issued by the treasuries. And of course, China really more bad news about their real estate market, and just weakness overall there. So all of that combined into weighing pretty heavily on the stocks this week. So you can see here the indexes all down, Qs, Dow down over 2%, and the SPY as well. And the IWM small cap index really took the biggest hit of all. And you can see here, there were no sectors that were in the green this week. Energy and technology were down the least, and consumer discretionary, which I've spoken about as being one that's you got to watch, is going to be under pressure. It was down the most, with real estate as well, of course, with pressure on vacancy rates, etc., and in the office space. And again, as we spoke about, the 2-year Treasury inching up there, and the 10-year up over 4.3, I think, at 1%, pulled back Friday and just finished right at that prior level of a high that we got on the year so far. US dollar, again with the treasuries, it was up as well, up about 0.7%, and Bitcoin really taking a hit here this week. Last week we were trading just over 29,000, and last I looked we were trading just over 26,000. So a big $3,000 hit, basically almost 10% hit on Bitcoin this week. So that was your week. Pretty interesting stuff going on. All right, before we get down and look at some charts here, it's just a quick pause for me to do a little plug for my book here on Amazon, Profiting as an Active Trader. So you can see it there, Rules, Strategies, and the Routines of Active Stock and Option Trader. If you want to check it out, there it is on Amazon. So let's start looking at some charts here. And we'll start with the treasuries, as we always do. Treasuries seem to be, again, in focus and driving some of the stock price action, as well as I've already mentioned. So you can see here we're kind of inching up here on the 2-year. There's a weekly, we're just up a fraction there, but again, just continues to grind a little higher there. And let's take a look at the prior high here. Just over 5%. We're not there yet, but again, a good number to keep an eye on as treasuries continue to move up. Whoops, skipped over the 10-year here. And the 10-year, as I mentioned, popped up. We had a high of 4.3 on Thursday, I believe it was. This is a weekly chart, and of course I was, as I've been mentioning in numerous videos in the past, just watching this prior 4.25 level as a high, and this is pretty much where we went out, pretty close to right at the high of the year. And this goes back a long way. Let's take a look at the monthly, just out of curiosity here. And you can see we go back a monthly. It hasn't been this high for even, I could look at the yearly. I think we'd have to go back even that far before, and I can't do yearly there. So anyway, interesting just to see how we're really sort of breaking out here. Transports, you can see here taking a beating. Daily, we did manage a little bit of a bounce back. This was really 3 strong selling days, so we did have a little bit of a bounce back on Friday, right in an area of prior sort of pause, this ABCD pattern here. So maybe a little bit of a justification for a bounce plus the selling, and you're going to see that pretty much throughout the charts there. And you can see we're really getting oversold on stochastics. So I would expect a little bit more of a bounce here next week in the markets, just generally speaking. But again, you can see we've broken down to a prior level of support or resistance here, which would become support. Again, expecting a little bit of a bounce. So we did manage to close above this area of prior resistance. And of course, resistance becomes support. And again, I would expect a little bit more of a bounce. There wasn't a lot of volume here on the Dow on the Friday on that bounce, which is a little bit concerning if you're looking for a stronger rebound here. On a weekly, we did have a lot of selling, obviously, and back into that area of support. So here's the cues. Again, 3 solid days of selling, a little bit of a bounce there, sort of right at this prior level of resistance, which we broke out from. And so obviously a pretty significant area that you would have expected to see some resistance. But again, we may end up with this kind of a pattern where we get a bit of a bounce here and then the selling resumes again. So I'd be any rallies, I think, in this market should be treated with some suspicion, because we definitely, you can see on the weekly, we definitely have broken the uptrend that we've been in. And August is typically not a great month anyway for the markets, so sort of the August doldrums. Again, same comment, I won't keep repeating it, but again, we had the 3 days of selling off and then a bounce back here. We're at an area where there was some support. It's kind of in this area, but it was more about, I think, a bit of relief, or at least oversold conditions on Friday, where we bounced back a bit. IWM, wow, right off the 200-day moving average here. Again, gap down on Friday, but then managed to squeeze back up. Not bad volume on Friday on the IWM, which again gives me some belief that we may sort of bounce back here, maybe up into this area, 187, 187.50. Stochastics are starting to turn back up here. Again, so volatility really kind of sucking out on Friday, but it has been sort of creeping up here. Certainly in terms of the sell-off, that doesn't seem to be, it's not bouncing up like we had back here in March. We haven't started to even break out. We saw some levels here in May, but rejected off the 200-day moving average. The fear index, you can see the dollar just continuing to creep higher here as interest rates go up as well. Of course, it makes the dollar more attractive, and it's really just a flight to safety, the dollar safe haven currency. And you can see here we're actually breaking out on the dollar. So we had a top here, and now we're making a bit of a move higher. Not great volume on UUP, but stochastics and MACD are all turning up, which maybe a little bit of a check back and then continuation higher. It's going to partly depend on what bonds do. And here's Bitcoin right at just over 26,000. Just got a rout on Wednesday. And you can see here we're back down to sort of this level, what would be the low here, 24,762. Opened at around 26,000. So again, this 26,000 level now sort of support area, which was, from here, resistance here, bit of resistance here before we broke out, support back here, and now looking for some support back here again. Watch out if Bitcoin breaks here. Definitely next leg down could be take us down to sort of the 23 to 22,000 range on Bitcoin. Okay, so let's take a look at a few stocks I'm watching this week. This on Apple, this 175 level just didn't even hold. I would say 170 would be your next level of support. Again, I'm thinking we'll see what happens on Monday, but maybe we'll get a bit of a continuation move. But this 170 area looks like an area we could be heading to. Apple looking kind of interesting, maybe for a bit of a bounce, but I think an opportunity here to sell 180 calls, and then if you wanted to protect those, buy some 184s or 185s above it, just if you're worried about it getting away from you in case it really does decide to break out. I don't see that happening in this market. AMAT was a stock that reported on Thursday last week, and you can see here had a nice move up on the day. So this is my after earnings play. So it looks like 135 might be a level that could be very significant for support, and this area up here around 147, 148 could be an area of significant resistance. So could be a good area to sell puts down here and sell calls up here, collect some premium for next week. This is kind of the strategy or trades that I've been using recently, is using options just to collect premium, and especially now with the premium elevated, the VIX is elevated. Amazon's again 140 is a significant area of resistance. I'd be very surprised if it got above there. Even this area here, 135, might be a little tight for a call sale, but again, and this area of support down here around 126, interesting for Amazon. Boeing's come down, filled this gap, which almost filled this gap. If you include this wick, they probably have. So anyway, yeah, Boeing, lots of orders, really real rich in terms of valuation. So on a PE basis, so 235, this 240 area looks like significant resistance, and I'll have to check on the value of the calls up there, but might be worth a sale there. Ford I was looking at because it's so cheap, and I know we're going to go into the UAW's negotiating right now with GM, I believe it is. Of course, when they usually, what happens is, in the strategy the union take is they go after one company and then use whatever they settle on as a sort of a Me Too situation. So after they settle with GM, for example, then they'll go to Ford and say, well, we got this from GM, this is what we want from you, and usually it's sort of a no-brainer at that point. But anyway, I think we might be heading into a strike situation, but this could probably put some more pressure on Ford as well. I'm looking at Ford because it's just so cheap on a PE basis, has a dividend of 5%, just has really gotten beaten up, and probably has some potential here just for a long-term trade. I just can't see how it could get much cheaper than it is, but famous last words. I've noticed Google's, and I've mentioned this in the room a number of times, Google's really been hanging in there. It hasn't really sold off that much in this big sell-off. You can see how we're really just trading in a range here. And on Friday, we kind of behaved a little bit differently. When the market was up, it actually ended up down on the day, which was a little bit surprising. So definitely this 132 is going to be an area of resistance for the time being. NVIDIA reports this week, so nothing to do for me here other than wait for the earnings report. A lot of speculation whether it's going to sell off because it's really overextended. It's really expensive on a PE basis. I've heard arguments both ways. Should be worth more, should be worth a lot less. So again, that's just a reason to step to the sidelines and watch what happens after. Let it define a trading range, and then take a trade. TGT reported on last week. You can see here, I think the options are actually still pretty good on a weekly basis in terms of premium. So you could sell some puts down here because I think we've established a bottom, and this 135 area is pretty much established as a top. So take your pick on that. I'll be looking at that next week. Tesla's really just selling off. I think it might be coming down to 200 here, maybe with a bit of a bounce along the way. And in terms of our ETFs, this is our ETF feature I like to look at. And you can see here we're still in this uptrend on energy, although it's looking a little toppy here. And of course, if we're struggling with the economy, energy is not going to perform as well. So not sure where it's going from there, but just keeping an eye on it right now because it's had a big run up. Yang is one I'm in right now. This is the sort of the ETF that it's a bear again on China, and I think we've got more downside on China, so I'm long some there, and in around just over $10 and this week. So really negative on China, and that's about it, everybody. Okay, so let's wrap things up here. This is your indexes currently. Support and resistance levels. We did breach some of these prior support levels this week, so I had to move these down. And of course, for economic events, we've got some home sales numbers existing on Tuesday, new on Wednesday. We've got some flash PMI numbers, manufacturing and services on Wednesday, the usual jobless claims 8:30. And then the big event this week is the Jackson Hole meetings event that's going on there. We've got 10 o'clock. There's going to be some speeches from the Fed. Consumer sentiment on Friday at 10, and then the big event, of course, at 10:05, Powell will be speaking at Jackson Hole, and that's on Friday. So I'm not sure if we're going to hear anything new. We kind of got the minutes last week. We know kind of where they all sit in terms of where they feel the economy is and inflation, but any kind of misstep or new information could move the markets on those speeches, and especially Powell's speech on the Friday. And as last but not least, we've got earnings coming up. We've still got lots of earnings coming up here. We've got Zoom on Monday. It's really the only one of note. We do have some interesting ones Tuesday. We've got Lowe's, which follows HD last week. Baidu and BJ wholesalers. We do have Macy's, another retailer, Toll, which is, of course, home builders, which have been under a bit of pressure with the rising interest rates. And, of course, the big event, didn't put a comma in there, but that's NVIDIA. Of course, that's going to be the big event everybody's going to be watching, because this is one of the big things that has been driving the market higher over the last 6 months, is this whole AI thing. So NVIDIA is, going to be really in focus on that Wednesday after the close there. Snow should be interesting as well. And then you got Marvell and Nordstrom's and Ulta. So yeah, some interesting things coming up Tuesday, Wednesday, Thursday especially. So lots of market moving events coming. That's it, everybody. Have a great rest of the weekend, and we'll see you hopefully 8 o'clock Monday morning. Live on YouTube. We'll be doing the usual engineering the markets with Jared, and then taking you through the 8:30 to 9:30 pre-market show, going through movers and shakers, and then of course trading the open at 9:30 with our members. So take care, everybody. Have a good one, and hopefully we will see you Monday morning. Bye for now.